networking, of course. So can you explain what DST is for people who don't know?
Sure. So DST, we're originated from Russia. So we owned one of the largest internet companies in the Russian-speaking world, Mail.ru, which we took public about a month ago or so. And from that company initially, we started making international investments. So the first one was in Facebook. And the reason for Facebook was because we saw that...
So that was the first investment?
That was the first international investment.
So how do you create a fund and your first investment is Facebook already? That's kind of...
Well, it was not a fund. It was essentially off our balance sheet. We were structured as a company.
And you led that?
So led the execution on that transaction together then with Yuri.
So what do? You call Zook and...
we started,
Hi, I'm Alexander. I'd like to invest. How much did you invest in Facebook?
The primary we announced was $200 million, and then we did a $100 million tender offer to employees, and then we kept buying throughout the last year.
So you did 200, 100, that's $300 million.
We invested substantially more than thereafter.
Buying from the...
from ex-employees. And
how much did you buy from?
So I think right now we're probably, well, significantly more than what we invested. The 200 plus 100. But no, the idea...
But that's like 500.
Yeah, probably a bit more than that. So it was interesting for us because thank you, because the way we came to the company was not saying, look, we have a fund and we want to invest. The way we came to the company was to say, look, we run the largest social networks in the Russian-speaking world. And what we've seen in Russia was very different dynamics to what we've seen in the rest of the world. And we thought in that particular field, Russia was leading. And the reason was because social networking emerged at a much earlier stage of maturity of the sector compared to the US. So in Russia or Ukraine or Kazakhstan or wherever else, people are just coming online now. And so from the very first day they come online, they actually have social networking available to them. So they skip all other kind of things altogether. They go straight from not being online to being a social networking user. And we saw, people are spending much more time on social networks, use it much more for messaging than email. And on every single one of our countries, a social network was either number 1 or number 2 website. And then in 2008, we looked at Facebook. It was globally still number 12 or 13. Because most of the people had this inertia. So, you did not grow up with social networking, you grew up with email. And social networking was this kind of like add-on. And over time, you just used it more and more. And then when you looked at the younger generation, we saw the same trends as in Russia. So the young people are using social networks and SMS a tremendous amount. And so for us, we were convinced Facebook was going to become really, really important and really big in terms of overall global audience. And from our own companies that we owned, we knew how much money you could make. So social networking was for us a very profitable business. So for us, it was just a matter of time before Facebook could turn the massive audience that we were thinking they were going to amass into a real revenue stream as well.
Because sorry to interrupt you, Alexander, you led the IPO of Mail.ru as well?
Yes. So that was last month.
Last month?
Yes.
Which is that the biggest tech IPO in Europe?
I think for the last few years, yes. So we went public at about, I think the valuation was somewhere around $6 billion mark. Now it's about $7.5, $8 billion as a business.
8 billion.
Yes, and that is mostly on properties in Russia that have a very strong social fundament. So the entire mail business is structured around communication. So it's instant messaging, it's social networking, it's email, and then you monetize across there with games and with user paying for things. It's a very different kind of monetization than you have in the US, where people are mostly focused on ads and selling ads. And so if you look into China, it's about 80% of the monetization is user paying for things. If you look into the US, it's like 90% is ads. And Russia is somewhere in between, geographically and from a business model perspective. And so the way we make money sometimes is vastly different to what you see in the West.
And so Facebook, you invested, was 300 million plus something like 200 million. Can you say how much, what percentage of Facebook do you own?
No.
Oh, you can't?
No.
But that's like several percent, I guess.
Yes.
Yes.
So in Mail, it's disclosed because the first investment came from Mail. So essentially, there is now Mail, which is the company, and then there is DST, which is structured more like an investment vehicle. And in Mail itself, it's 2.4%, and the remainder is owned in DST, and then DST owns more than Mail owns.
Oh, that makes 5.
Or more.
Wow. So, and what kind of a shareholder are you? You're trying to, are you going to exit when they go IPO? When is that, by the way, again?
that we don't even.
Are you on the board of Facebook?
Yeah, so we have good relations. We don't have a board seat, and we typically don't want to take a board seat. And the reason is we go for very, very late-stage companies where the team has proven that they know what they're doing, and the value you add as a board member is much less significant than in an early-stage company where you help somebody recruit a head of sales and do all the hard work, really. From our perspective, we are keen on having a good relationship with the management. But you can have that dialogue and that relationship without having to sit on the board. And if you have the business models that we have, there are not that many companies out there. So you don't want to have conflicts of interest all around. And by not being on the board, it's much easier to be an investor in Facebook and in Zynga without these guys saying, look, this is awkward if we're discussing the Zynga relationship at the board level and you're sitting here, that would be strange. And so for us, it's much easier to not be on the board and not be that deeply involved.
So can you explain why you are? So you came late. I mean, the valuations must have been crazy on Facebook. I guess you.
Yeah. So I think we came in at the primary we did at about a $10 billion valuation. A tender offer was at 6.5 billion for Facebook.
5 billion.
6.5.
6.5 billion.
Yes. And that at that time was a significant premium to where the shares were trading. And I remember.
Now it's 60, right?
I
mean, we don't know, but
it's difficult to say. I know Barry from Second Market was just here, and I think it's interesting to see what shares are trading, but I think it's on relatively limited information, and it's the volume, even if it's $30-40 million, it's very hard to say what the real price is.
But you buy up till until at what number do you buy right now? Because you're saying you're buying Facebook shares from employees.
We haven't bought now for quite some time.
Oh, okay.
But last year, after we announced the transaction, we thought, Facebook has a tremendous amount of potential. So I spent a lot of time actually just going and speaking with shareholders and see if I can get, some shares. And most people sold a small portion, they diversified, but most of the shareholders were actually big believers.
And so then you did Zynga just after Facebook, or was it Groupon?
Zynga was in December of last year, and that came about as. In Facebook, really, I think the idea, what's behind DST and why I think the model is interesting. If you're a founder of a company and the company is extremely successful, and some of these companies have come out of nothing and became really, really large really quickly, and you're sitting there and you see you calculate your paper wealth and you go like, wow, I'm a rich man. And you look at your bank account, there's nothing there. And there's just a discrepancy. And also for the shareholders, you have engineers and they all have options and they think, oh, these options are worth now a lot, but I can't even go and buy myself a new car or so. And so for a long time, you had two choices. The choice one was you go and sell the company. But then it's game over. The company will be forgotten at some stage, and that's it. Or you take the company public. And so what we've seen consistently happening over the last, ever since the internet sector existed, was companies went public very, very early. So and left in good cases 5 to 10x on the table, in bad cases 50 to 200x on the table. And I'm talking about companies from eBay to Yahoo, Tencent, Yahoo Japan, Google, everybody. And so the idea that we had was you go in and when at that decision junction of a company, when it could fundamentally go public, but doesn't necessarily want to, except for getting liquidity, we can say, look, liquidity we can solve differently. You should go public when it makes sense for the business and not because you want to get extra cash. And so the idea, for example, what we did with Facebook was to say we did a tender offer to employees. It was a real tender offer with a circular and everything else. And people could sell up to a certain amount of their vested shares, and then they had a hard limit, so they could not sell more than $1 million each. Now, for $1 million, you do not go and retire, but having taken it off the table and having something in your bank account gives you much more patience to kind of just keep on running. And I think that was the same idea with Zynga. Zynga was a company extremely successful. They could have gone public. They could have sold the business, but the founder is a very strong guy and knows there's a lot of potential to build this business. And so the idea was you come in and do a very similar transaction like Facebook, where you provide some liquidity to early investors, angel investors, some early employees, and then the company has that pressure off their back, and they can run for another 2 years.
And so how much do you own of Zynga?
In Zynga, we invested about $150 million or so.
I'm sorry?
$150 million.
150 million.
Yeah. We didn't disclose the valuation at that time.
How much did you say?
We didn't disclose the valuation.
Okay. And Groupon, you almost sold it.
We didn't. No. No, there was lots of press speculation and rumors out there. I think the company is going to go for it, and they're going to grow on their own. And I'm extremely happy that is where they're heading.
But so can you comment on, so it's been like, what stopped the deal between, the 5-6 billion deal between Groupon and Google is the monopoly stick regulation that could have?
No, not necessarily. I can't comment really on any kind of discussion these guys.
Oh, there's no one in the room that would,
yes. On any kind of discussion these guys may have had, but I think the management team there realizes that what they have right now is pretty special, and so to sell that business, I think it would just take a lot. Not just in terms of money, but it just takes a lot when you have something going on like this. And so the way I look at companies generally, it's very similar to books as well. Many books are written, and some books you are basically published, you read them, you forget them. They basically never existed. Then you have a few books that kind of like last for a few years, and our generation will know them, but not that many people beyond that. And then a few books written that just last to generation and generation and generation.
So that would be, you think those companies, Facebook, Zynga, and Groupon, will be above like a lifetime span, like they will just change the world?
Yes. So essentially, there's actually, it's Arthur Schopenhauer who said, you can divide, at that time he was speaking about authors, into comets, planets, and stars. He said, look, comets, you look up in the night sky and say like, wow, it blinks really brightly, but the next day you've forgotten that you've even seen one. Planets stay for a much longer time, but they only shine on borrowed light. They don't have their own system. They're in someone else's system, and they will too have to vacate their place. And then only the stars shine out of their own power and have real staying power. And it's really difficult to differentiate, stars from planets. And so I think it's very difficult to build a star or something that has staying power. And if you have a company that is in that kind of category, I think it's great for the company not to go and sell out early, but to actually develop that into something that defines our generation. And I think Facebook certainly is a company that well beyond our generation people will see as extremely impactful. I think a company like Groupon is on a very good position to actually be one of those companies. They can be, how eBay became one of those companies. I think Groupon can become one of those companies if they execute well. And based on what I've seen there in the team, I think they're executing phenomenally well. And
so then you don't really care about the valuation at which you're buying? Is that how DST works? It's like...
No, I'm always amazed when people comment always on the valuation and don't know the financials of the business. So, you read the blogs, and I remember when we invested in Groupon, people were like, look, this is a new bubble, and how can this valuation be true, and so forth. And I, with all the information, I have difficulties making a financial forecast for 2011 or 12. And as somebody who's just commenting on this without knowing the valuation, you cannot possibly say the deal is expensive or cheap.
So you're saying it's cheap at 6 billion?
So I think everybody who looks at the last 12 months of the companies we came into, Facebook, Zynga, and Groupon, must think we're completely nuts. Everybody who thinks about 1 or 2 or 3 years ahead will have a really difficult time to argue that those deals were very, very expensive. So it just depends on how you measure growth. And I think most.
So you're still buying Facebook shares? At 6?
No, we haven't bought Facebook shares now for quite some time.
You told me that.
But I think mostly people think linear. And it's very difficult for them to see that if you grow 1% a day, you're not on a linear path. And if you look at Groupon, at the time we invested, and those are public stats because they show them on their website. At the time we invested, they sold, they existed for about 15, 16 months, and they sold 4 million Groupons in total. 30 days later, they were at 5.5 million Groupons. So they grew 25% in 1.5 months. I think they'll hit 20 million Groupons sold pretty soon, like next week. So between the time we invested, where it took 15 months to build that, it took another 8 months to grow 500%. And so if you are on that kind of trajectory, then looking in the past and then making assessments around valuation is completely nonsensical.
And tell me about how, so DST, I guess if I'm a startup in the room or in watching online, we have a lot of people watching, I shouldn't contact you, right? How do I qualify to get $200 million? Like you need a certain size, so... like, does Twitter qualify? Is that big enough?
Well, Twitter is an interesting company, but fundamentally, I think there is a universe of companies that kind of like fit into that category. And the way I would define the category would be companies that are either on a very clear path to become one of the leaders in their segment, or could already go public if they wanted to today, paired with a lot of growth. And so
they could do what? I'm sorry.
That if they wanted to, they could go public today.
Oh, they could go public.
So
okay.
if you're a company where you say, look, we're thinking about accessing the public markets, but we're not sure if this is the right thing to do, and you have a tremendous amount of growth, that's the kind of company we like. And because we don't do anything but internet, so everybody in the firm just does this one thing. We see ourselves as wanting to know all these companies. So we believe there's probably 25, 30 globally that are probably worth more than $1 billion that are still private. And those are companies that you want to have a good dialogue and relationship with.
So minimum $1 billion valuation. That's what you're looking for.
I think that's when you kind of like get a sense for, that company is going to be long-term, real-term sustainable. The reason why we're not in early stage and why I think it's a different business is because we're extremely small as an organization. And we don't have people on the ground. And I think if you go early stage, what the companies need is much more than just a check. Right? So if we had an office, in all these different locations, and we had people, and we had board members that could help those companies grow, then it's a different story. But if you're kind of, looking at the world like we're looking at it, and you don't take board positions and so forth, I think there are extremely qualified and people that know the internet inside out on the venture side that can provide much more help than we could provide. And so that's not something where we want to compete. We see most of these venture firms as our friends over time because, the more successful companies that they have may do a deal with us, which also helps the VCs because the VCs then have a little bit more time to realize also some additional upside. And so that's an area we don't want to go in for that reason.
Then you have a problem of, you don't have many billion-dollar companies on the internet space that
That's why we don't make many investments either.
Sorry?
That's why we don't make many investments either. So
right. So, no, but but you don't think you would have a role or should have another fund just to help the entrepreneurs get to that point?
I think there are a lot of really, really strong funds that actually are helping these guys to or helping companies to grow.
So call me when you're worth more than $1 billion.
Not necessarily. I think it's kind of like a company that's on a path to get there. It should be a company that we should be close to and should know. And
Foursquare, for example, that qualifies?
I think that's a company that has a tremendous amount of opportunity in front of it. Right now it's relatively early still, but it has phenomenal growth, and so that could be a company that could become really interesting over time.
Europe, Alexander, we're in Europe. You're a European fund. If we extend your European continent, right?
Yes.
Not only the Union. So how do we fix it? Because that's kind of sad in a way. You're a European fund, and you invest in Facebook, Zynga, and Groupon.
Yeah, it just happened to be that they were in the US. I think we're looking global. So if there were a company from Europe that would kind of tick the boxes that we're looking for, then we would absolutely invest in Europe or in Asia for that matter.
But there isn't, right?
Or anywhere else in the world. I think in Europe, the issue is that many of the companies, the first check comes along and people sell out.
Yeah.
So there are companies that have, real opportunity to grow and become really meaningful, but, it's just tempting to sell out. And I think, you don't have enough role models. If you had 7 or 8 companies out of Europe that made it into, multi-billion-dollar global businesses, I think more people would have the confidence to go and build. I think right now you have Skype, and beyond that, people haven't seen that much success, and so people are more tempted to sell if they have something really interesting, or just stay locally.
And you were not interested in Skype because you could have done a lot with Skype.
Well, Skype was a slightly different deal. It was not a minority investment like we did in Facebook, Zynga, and Groupon. So it was a full buyout, and it was at the same time essentially as we did Facebook. So it was.
So you were busy.
So it was something that we did not look at in detail at that time. But in terms of criteria, it's a company that would tick all the boxes. I think it's a really important company that has a tremendous amount of upside and future ahead of it as well.
Tomoko Namba-san was here yesterday from Dina in Japan, and she said, we're kind of a Zynga of Japan, and we have a better ARPU than Zynga, and so it was kind of an interesting conversation. Of course, she's already public, but you see a lot of happening in. What's your take about Asia, Japan and China being huge markets, and India? Do you think the center of gravity will shift there? Will you invest? Do you think we'll see one of those billion-dollar companies there? Because again, the 3 you picked are in the US. So.
Yes, no, it's definitely a geography we're looking at as well. And if you've seen yesterday the IPOs of Youku and of Dangdang, extremely successful, extremely oversubscribed, and those are companies which are still relatively early in their life cycle, but people are recognizing the potential in those markets as well right now. So it's definitely something that we spend time with, and we know a lot of the companies there as well.
Tell me, give me advice for young entrepreneurs, because like I see in your way of thinking, you're thinking more a company that will change more than over a period longer than a generation. That's something. When you start a startup, sometimes you think 3 to 6 months, 12 months as a And then if you start in Europe, very often you start, I'm going to dominate Germany or France or Spain. And so you're really looking at people who are looking global, looking at long term. I don't want to sell. Like Dennis Crowley yesterday said, hey, yeah, I just want to sell. I don't care about the whatever. I think we talked about 50 million or 100 million he could make. I don't care. I want to change the world, and there is something. So tell me how an entrepreneur can wake up in that mindset. How, if you coached me, I would love that. What would you tell me, or what would you tell an entrepreneur to think, to qualify, to be in the mindset that you're interested? But I'm sure you're talking to CEOs who are like young CEOs who you think qualify. I'm sure you won't talk to me about who they are, but like a few people, what defines them?
I think the important thing is not many people have actually the opportunity to really change things and to make something grow really big. And I think the ones that do, and again, it's very, very few. I think the advice there is, look, the check that may come in, will give you some monetary satisfaction. The likelihood that you will have another chance to build something that could impact the world and like leave a real legacy is very minimal. So, this urge to build something which could be really meaningful is probably a once-in-a-lifetime kind of chance. And so that's why I think people like Dennis or so, they have the opportunity. I think that the product itself is an opportunity to build something like that. And so I really applaud somebody for saying, look, I'm going to go for it and build this. And so I think in Europe you have a few companies that have the potential to change things as well. And there you have some entrepreneurs that want to go and do it. And I think every time you have the mindset of, sometimes people send us presentations with their business plan, and you start, and at the end there is the exit plan. They say like, look, we'll do this for 4 or 5 years, and then we're going to sell, and then here's the IRR. And they haven't even started yet. So this is completely...
For you, it's ridiculous.
It's ridiculous.
Having an exit plan in the presentation, that's so interesting, because we have Dave McClure tonight, who invests, like Jeff Clavier does in Silicon Valley in early stage, and what he says is, that's fine if I invest 500 to $1 million, and in 2 years we sell it for 20 million or 50 million. That's great. And you're saying, not interesting.
Yeah, that would not be interesting at all. Because, I mean, there's different ways how you can make money over time, but, being part of really interesting companies that change kind of like how things are done is far more rewarding than, going from $500,000 and turning that into $2 million.
No, I agree. Yeah, well, I guess it doesn't make such a difference. But you see, it's like a chicken and egg story. If I create a company and my pitch is I'm going to change the world in that, space, then I generally meet investors or angels. The first people I talk to tell me, yeah, right, but deliver me something short-term first, right? Yeah. Like, change the world, great, but first, revenue and so on. And you're like, yeah, please tell me when you're going to change the world, but I'm going to talk to you only when you have $1 billion valuation and you can go public. So in between, how do I...
Yeah, but I think, look at yourself. You're right now, you've created a fantastic event here for Europe. You're helping
thank you.
You're helping entrepreneurs in Europe substantially, I think. And that's fundamentally it's a big event, right? If someone were to come to you right now and say, look, Loic, I'd love to buy LeWeb. On the one hand, you could take some money off the table and say, look, this was great, and can buy whatever, another house. On the other hand, you say, like, look, I'm building something really special here. It's for the European community. It's for the internet community. It's something that is, the #1 topic on Twitter, etc. It's something that is going to create something really big and meaningful, right? And I don't think any kind of exit money can, pay for that over time.
No, we had a few acquisition offers, and we're not looking at them.
See.
Yeah, we like LeWeb. We like to hear you all year long, that you created and you raised funding. I think this has an impact. So thanks for bringing it. The idea is to contribute in helping entrepreneurs. And so this is why I'm so happy to have you here, explain how entrepreneurs should be, should have a global vision and a long-term vision and a change the world vision. But that's not always easy at the beginning. That was my. But yeah, that's the idea here, that it's long-term, and we're not interested in. I'm hoping in 10 years we'll talk about the next billion-dollar companies that came from this room.
Yes, I'm sure, actually. And
but you should help.
I think this kind of conference actually really helps a lot. Because in the US, you have this fantastic ecosystem in Silicon Valley where people talk with each other a lot. Ideas flow around freely. People move from company to company freely. A lot of talent and knowledge transfers. Here you have great entrepreneurs in Berlin, in London, in Paris, in Stockholm. And it's really difficult to get this kind of like community of ideas exchange or so together. And I think this is kind of like the forum which helps more than any kind of government program could, where you get some kind of grants or whatever else.
That's something else that I was thinking about as you were talking. Is politicians and governments think generally shorter term than you think, which is also very interesting. When you're saying I'm betting on Facebook. It doesn't matter if it's above a generation, a lifespan. That's very interesting, but because governments don't think this way all the time. This is very impressive, Alexander. Thanks so much for making, you've been, you were in one country every day the last
week. For the last few days, yes. So last year, this job, because we're not that many people, we actually travel a lot. And you want to meet the companies and speak with those companies. And it mostly comes down to, is there some real potential there? And then who runs the business? And so to who runs the business, you actually need to meet the people.
Well, thank you so much for making the time in your busy schedule, Alexander. And good luck in helping those companies change the world. I agree. I think Facebook and Zynga and Groupon have that potential. I hope you find many more. Thank you so much, Alexander.
Thank you, Loic.
Thank you. Thank you very much.
Thank you.